Yo, what's up guys, Mo here, welcome back to another video. So in today's video, I'm going to be doing something new for you guys. I'm going to be going over how to trade Wyckoff in conjunction with smart money. Honestly, collaborating these two ways of analyzing the market together is very powerful because we can use Wyckoff to basically identify the direction in the market, and now we use our smart money concepts to get our refined entries, allowing us to get extremely precise and high risk to reward setups. Okay, so as I said, this is going to be something new on the channel. I've never introduced Wyckoff before, but I'm going to try and bring that a bit into my videos, just to give you guys a variety and just a variety of tools that you guys can potentially use in your trading. Okay, so I'm going to get right into it. We're going to start off with a small example that I showed my team on the last Friday on the 5-minute time frame. Okay, now before we get into smart money, I know a lot of you guys get bogged down with the markup. Just even looking at the accumulation schematics, looking at the distro schematics, it just appears very confusing. But what I'm going to kind of try and explain to you guys here is, don't really bog yourself down on the markups, you know, trying to mark up where the preliminary support is, where the automatic rally is, etc. Just kind of think the reasoning behind why it's all happening. Okay, and honestly, there's three things that you just want to look for. Okay, the first thing is you want to look for a sign of strength, okay, or a sign of weakness. The market is suddenly slowing down, okay, the market is starting to consolidate, okay, and then you want to look for your break of structure. Okay, so the market is obviously broke. We have our 1 here, we have our 2 here. Market structure suddenly breaks on a smaller time frame. And then lastly, you have your liquidity. Okay, liquidity is just a big part of this, because without liquidity, the banks cannot move their orders. Okay, they can't move their orders. Why do they need your orders? Why do they need your liquidity? Because once they run and take your liquidity pool, okay, right below these lows, for example, they're forcing you to sell your position back to the market. So in order for you to sell your position back to the market, basically send it to the institutions so they can now fill in their orders, because if they simply just try and execute their orders instantly, they're not going to be able to fill in the markets. Well, anyways, enough of that theory. Doesn't really matter right here. So once again, the three main things that you want to focus is obviously noticing and identifying the sign of weakness, okay, break of structure, and then you want to see runs on your liquidity constantly. So first of all, before we even jump down to the 5-minute time frame here and trying to identify our accumulation, I'm going to obviously go on to the higher time frame, and we're just going to look at structure. Okay, understanding market structure is so important, because if not, it's going to be very hard for you to tell if you're in a reaccumulation, if you're in a distro, or if you're in a redistribution or an accumulation. Okay, obviously the start of these schematics look the same, so it's going to be hard. So one of the first things that you want to understand is your market structure, and I always like to go on to my daily time frame to identify my market structure. Okay, so one of the first things here I'll do is I can identify my market structure. I can clearly see that I am bullish on GBP USD. Okay, we're creating these higher highs. Okay, we're pulling back, going for another high. It's clear. Once again, we can see right here that this is our buyer's zone. So as long as we stay above this area right here, we're in our buyer's zone. Okay, even though just because the smaller time frame tells us that we've been bearish for quite a few days, even a few weeks, we're still in our buyer's zone. Okay, as long as we stay up above this level of demand right here, we're still buying. Okay, another thing right here is suddenly my price action has played right into a point of interest for me, which is my institutional candle right here. Okay, so usually how I use this in conjunction is, usually I will wait for price action to come to my point of interest, for example an imbalance or an institutional candle. Then I will hop onto lower time frame and try and identify an accumulation schematic there or distribution to see if price is going to go my way or not. Okay, so I'm not just suddenly just trying to find an accumulation right in the middle of a trend. You have to have a point of interest on the higher time frame to see if there's going to be obviously a sign of strength coming in from here or not. Okay, and obviously this is the first thing that you kind of do to notice it, is obviously look if you have a PS. Okay, which is, you're not going to notice that straight away because your PS could literally just be a pullback. Okay, but your PS, which is your preliminary support, is simply showing you that buyers could potentially be finding support at that level, and there's buyer strength at that level. Okay, so now I'm going to hop down to my smaller time frame. I believe I'm going to take a look at the 15-minute time frame, much easier. Okay, so you can see price plays down, we're creating lower lows. Okay, down structure, boom. So obviously we hit our point of interest right here on the daily, which I am going to mark out just to make life easier right here. Okay, just like so. I'm just going to mark out this area in general, just like so. We hop on 15-minute time frame and boom, we hit that area. First thing I see, what do I see? Boom, I see that price has played right into my institutional candle, the daily time frame, and we have a selling strength. Okay, you can see that buyers have come in. Okay, there's literally passive orders getting triggered right at this level. Boom, pushes price up. What does it do? It breaks structure for me on the 15-minute time frame. Okay, that's one of my first confirmations that happened right here. What do I do? Draw a line here, and I mark this as a BOS. Now, I'm not going to go into very detailed here on how to trade Wyckoff, what all these mechanisms mean. Okay, I'm simply just showing you if you have at least even a small level of understanding of Wyckoff, how to use this with smart money in conjunction with smart money, because it's very powerful. But obviously, if you guys are interested in understanding Wyckoff much more and understand the smart money concepts much more, I'm going to be producing that in my upcoming course. Okay, it's going to be very valuable for you guys, so stay tuned. It should be free to all of the current members in the chat. Okay, so we have our brick structure here, of course, and obviously now we're consolidating. Okay, we have lows being created. Now I'm going to mark out all my lows. Okay, and up until this point, I'm going to actually use my replay tool, because obviously marking Wyckoff is one of the easiest things to do in hindsight, but to be able to see this happen in real time, okay, this is where it shows how good of an analyzer and a trader you are. Okay, so obviously we have our lows created right here, and I'm still waiting. So obviously the fact that we have liquidity right here, this is going to be a magnetic area for price to potentially come down here and clear the lows. I'm going to let price do its thing and let it play out. Okay, so our first run right here. Okay, boom, we got manipulation on these lows. Okay, liquidity grab right here, price pushes down. What does it do? Boom, 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 boom. Creates a triple bottom for me here once again. More liquidity. And now I can simply mark this for you guys right here. Okay, but I don't believe that I need to. But I'm just going to make it easier. I'm just going to mark it up really quickly. I mean, you can consider this your PS or your PS right here. I'm going to call this my PS. I'm going to call this my selling climax. Okay, see, we've selling climax right here. A lot of selling. So you can see manipulations coming into the market right from this area. Just going to mark that. Let's see. Sorry for the delay. Okay, and now we have our secondary test right here. You can consider your secondary test. It doesn't really matter where you place your secondary test. This could be a secondary test. This is another secondary test. This is another secondary test. Doesn't really matter. And then I have my ST in phase B. My ST in phase B. You can consider this your ST in phase B. And so far, you might not even be able to identify an accumulation schematic. It does not matter. Okay, the most important area, especially for us smart money traders, is we want to be able to find this in our spring area, because our spring area is basically going to contain our institutional candle. Our institutional candle is going to be located right there, and then our test in the schematic is going to be our mitigation of that institutional candle. Okay, so once again, we have another run on these lows. Okay, another run on these lows right here. What happens? Boom. This liquidity gets cleared, and lastly, our liquidity gets cleared. Usually the spring ends up clearing all the liquidity in past. It's literally the last liquidity grab before our push, before our up move. Okay, so now obviously, boom, we have that buying coming in right after our spring. Okay, and I'm going to play that a bit more. Boom. And now what do we look for? We obviously look for our institutional candle. Our institutional candle is the last down candle for the up move. Mark the wick to the candle right here. And just like that, you get a beautiful entry. Price goes up, comes down, plays right here. My stop loss would be right at the close of this candle, giving me around a 5.6 pip stop loss. And personally, I was aiming for, I believe, this higher here. Okay, so why was I aiming here? Because we have obviously a double top. So I was aiming for my liquidity to be cleared right up at the top here. All right, and there you have it. Beautiful trade, pushes all the way up, retraces back down. Let's say you missed this trade. Okay, most of the time the institutional candle ends up triggering that institutional candle. That becomes a secondary institutional candle. If I go into my 30-minute time frame, you're going to notice that. There you go, and you could have gone in on the entry right here. Obviously, your R might have not been the best, but it is a potential secondary setup. Okay, Right here is nearly a 10 to 1. Okay, you're not always going to get crazy 100 to 1, 100 to 1 RR trades. One of the biggest things that I tell my students is, just because your analysis is high risk to reward doesn't mean that your trade's going to be high risk to reward. Just because you have a take profit of all the way up here, okay, and it's like 50 to 1, doesn't mean that price is actually going to come up here and clear that high. I'm not saying that it doesn't, but you have to be realistic. You have to set very, very realistic take profits. You can't have, let's say, a 1 minute stop loss, okay, and a 1 minute entry, and then go onto the weekly time frame and set take profit on the weekly time frame. You have to be very, very realistic, okay, especially with trying to notice how strong the volume is in that trend and where price could potentially go to. Okay, so obviously then you have your LPS, your BU, and away it goes. And let's see, there we go. Very, very, very successful schematic right here. There we go, brilliant. Now obviously you could have caught multiple trades up along the way. Personally, I was out right here, beautiful, beautiful trade, very, very happy with it. And then I caught another trade right here on the Friday. Once again, it was only like 35 pips to take profit, but you just have to get used to taking whatever you can from the market. Got in on this beautiful trade, clearance of that liquidity, push up, retracement back down, and away it goes. Now this wasn't the only trade that we caught. Actually, this was not the Friday. I believe this was the Thursday. Sorry about that. But we got a similar thing happening on gold, which I'm not going to go too much in detail with it, but it was right at this level, I believe. Obviously, we had our accumulation right here. Once again, don't complicate it. An accumulation is just a consolidation. Okay, just right here, you have accumulation. Now, I'm not going to mark it up, but you can argue, obviously, that this is your PS, your SC, your AR, your ST in phase B. Okay, and this can be your spring. What do I have right here? I have my 5-minute IC. Mark it out. All the way down here. And once again, remember, you can have another accumulation right before price comes up to it. Okay, so you can see just right here how we have our spring right here. Price obviously breaks structure to the upside. We clearly can see that we're kind of bullish. Price now breaks down all the way, and we have another 1 minute accumulation right in here. Okay, I'm not going to drop down to the 1 minute time frame right now. We have another accumulation right in here, and you can see literally the spring of that accumulation plays right into the accumulation right here, becoming the test for this one. Okay, so this becomes a test of that IC, and obviously you could have bought a really, really nice trade right from this area. Boom, beautiful trade. Okay, and I would be personally aiming for these highs, which I know a few people caught in the group chat on Friday, I believe. Now, let's say for example you missed it. Now, for the spring right here and the accumulation that you had right here, this would be my test. Okay, this institutional candle, my last down candle for the up move. Look at the way price literally retraces right up into my open. And here we go. So you had two potential areas where you could have gone into that setup. Okay, right here, and then your chance right here. And obviously, once again, see how just because I had such a respectable take profit, you could have either had it here or here. Once liquidity got grabbed, boom, once all the liquidity got grabbed here, this high, this high, this high, price decided to just absolutely melt straight away. So this is the importance of taking your profit at a very, very respectable level, a level that makes sense, because if you're setting your take profit at a very, very high place, you could have literally just left 180 pips on the table, just like so. Okay, with that being said, guys, don't want to take up too much of your time. Hope you guys kind of gain a bit of value from that. Now, once again, as I said, if you're interested in learning more about these concepts, guys, make sure to head on to fuacademy.io. I'm looking forward to seeing you all there. Have a good day, guys. Bye bye.